On today's show, we have Conor Riley, who has a background in finance, first running a venture capital fund before working as an investment banker focused on the middle market. He has helped companies on both the buy and sell side, but now he has changed roles and is the CEO of Lucie Inc., a cosmetic company specializing in high-end, vegan, cruelty-free makeup brushes. Let's hear his amazing story in a moment.
Go ahead, sit down. Thank you, sir.
Conor, thank you for taking the time today to be on Silicon Valley Successes.
I'm glad to be here.
Now, Conor, tell me a little bit about your investment banking background before moving into your current role as CEO of Luxie.
Sure. So I, ran a fund and really enjoyed making investments. I wasn't any good at operations, but I loved transactions. So after being at a fund for several years and then having some time away from the Valley, I really found my home at Global Capital Markets as a principal and started investment banking, which is all about transactions, buying companies, selling companies, mergers, acquisitions. It was really, really fun. And I like getting out there, being on the front lines. I loved raising capital and really felt that I could deliver certain values to the transactions that the principals often overlooked.
Tell me about some of these values that you can bring to the transactions. And most of our audience is the entrepreneur, the early stage company. Is there any advice you can give them on working with an investment banker?
Sure. I think that by and large, when you are an entrepreneur, you're so focused on the business at hand, getting that next contract, looking at those suppliers, developing your product, developing the IP, you often overlook where you are in the market, and you don't necessarily have the connections to the marketplace to really understand how your company aligns with what current investment theses are out there, how funds are deploying their capital, and what the drivers are. You might have a great piece of IP that's incredibly well valued, but you're struggling to bring on a supplier and don't even understand the true value of your enterprise. So I think that's where an investment banker can really come in and shine a light on those often overlooked values. And to the entrepreneurs out there, I'd always say that working with an investment banker is great, but just keeping your head on a swivel, looking at what kind of deals are out in the market, and kind of finding your place in the world is always the best way to start.
So then, how did you transition from an investment banker to CEO of a makeup brush company of all things?
A far cry from finance, but but it was actually really natural. I raised some money for the company and began a working relationship with the founder, who was an incredible woman who was on a mission to develop brushes that were vegan, cruelty-free, and really offered the performance of brushes made from animal hair. And that required an incredible amount of engineering on her part and sampling. So when I came into the company and raised some money, we developed a great relationship. And then after several years of working with her, she asked the question of whether I'd like to come on board and run the enterprise, and I said yes. And it was a lot of fun to be involved in the company on the day-to-day operations. It felt good to have a staff and team to manage, and it was just an incredible transition.
What are some of the skills that you had as an investment banker that kind of relate to what you're doing now?
I think the biggest job for an investment banker is to really understand people. And so as a CEO, you are constantly interfacing with people, you're constantly talking to people, and you're constantly trying to refocus people into whatever the task is at hand. And that I feel like my best asset is really just being able to communicate with my team, being able to explain strategic initiatives in a way that they understand, and then parsing out deliverables so that we can hit our goals.
And then this role as a CEO, how would you say time-wise, is it more demanding than the investment banker role, or is this difficulty level, challenge?
I'd say that they're both really demanding. As an investment banker, you're obviously sort of doing it in sprints. You have deals that are closing. You've got time that you're working 24-hour days at certain points in the deal to make sure that all the documents get done, that all the signatures get done, that due diligence gets done. And I would say running a company is more of a marathon. So it's not so much the 24-hour days, it's more the 16-hour days every day forever.
Which do you enjoy more?
I don't know. I think both make you crazy. So, honestly, I think that, knocking the cover off the ball and closing a big deal feels amazing, but so does leading a team down the field. And the team I have at Luxie is absolutely incredible.
So with a lot of companies, after they grow to a certain stage, they will bring in a different CEO to take it to that next level. What was it like when you came in to Luxie, that transition for the team there and the whole business culture?
It was difficult. I think whenever you have a mom and pop team that's running a company where there's obviously some commingling of funds and the company is sort of like the personal bank account, and there might be a few cars on the books and a few other kind of atypical items, that's not necessarily unique for mom and pop companies that are looking to really run their lifestyle out of the business. So when I came in as CEO, my first job was really to clean all that up and standardize the accounts, standardize kind of the processes in the business, and do that in a way that really allowed for scalability. So, when a company is a mom and pop company, often they can get from 0 to about $5 million, but it's scaling from 5 to 10 million, and then from 10 to 20 million. That really is the challenge. And so, when I came in and was doing this, there were plenty of uphill battles to be fought just to make sure that we were really going to be able to deliver our numbers.
When you're saying the 0 to 5 and 5 to 10, 10 to 15, why do you think those are kind of the max that you can reach at each of these stages?
Well, I mean, that's just my best guesstimate. But typically, a few big orders, a couple people running a business, you don't necessarily have a large customer base. You're dealing with maybe one manufacturer, and you scale as best you can, and eventually your bandwidth catches up to you. You haven't necessarily built out a sales force, an operations team that you can scale rapidly. So at about the $5 million point is when most mom and pop businesses are sort of need to look at professional management. So I asked them to hold my calls.
So now that your secretary just answered your call for you,
Yeah.
Tell me about some of these processes that you implemented when you entered your CEO role.
Well, the first one was getting my arms around the numbers. Bookkeeping is always the first challenge of any small business, and so it was important that we started establishing the proper way of keeping the books. Everything from issuing payments to invoicing to processing sales orders. All of that had to be structured, and so that was my primary focus initially. And once that was built, then it was operational excellence, working with suppliers, figuring out how to buy inventory, how to manage inventory, and then after that, it was all about sales.
And then all about sales, did you copy the sales pipeline that was already established for when it was mom and pop, or did you have to reinvent that whole process?
It was really a question of building onto it. So there was a pretty strong customer base already established in the company, and it was just a question of leveraging that existing base so that we could move forward and capture additional business. And so we did that with onboarding retailers, with working with other platforms that were somewhat similar. So we were able to leverage everything that we knew, but it was just building a scalable force so that we could keep growing.
And then as you're growing, how did you go about finding those new customers overseas? I mean, you're based here in Silicon Valley. How do you find those customers in Nepal or South Korea, or I'm trying to name some places around the world?
Yeah, no, your grasp of geography is amazing.
I was going to name a few states there, but I figured.
Yeah, well, I mean, but it is sort of interesting how when you open yourself up to the really to the market and the global market, and for us, we cater to the luxury and prestige retailers. So that is not the mass retailers, and it mandates that we needed to go international just to get the volume of customers that we needed to expand properly. So that was kind of the starting point for us looking overseas. And then it was a simple matter of saying, hey, look, we've got demand in your country. Just our e-commerce business alone ships to over 200 countries globally. So it was really easy to call somebody up and say, hey, listen, you've got customers that shop at your store that are looking for our products. Let's figure out how to work together. And that's what we use time and again.
So for these initial relationships with these overseas clients, are you flying there and talking to them face to face, or is this all over the phone?
Flying there. I have a natural distrust of technology, so I think that, you know, especially for a new brand that's just establishing itself globally, you really need to go there, meet the buyers, talk to them, see the stores, see the space that you're going to be in, see what other products are on the shelf next to you, and trying to do that over the phone, as convenient as that is, can often lead you to poor store placement, to not really understanding what your customer needs. And at the end of the day, with the consumer products business, particularly in makeup, it's all about education. And so you really have to make sure that you understand who your customer is and how their sales staff operates, who's on the floor, how do the managers work. You know, can we as a brand properly incentivize them to sell our products? You know, what kind of giveaways can we do? What kind of other sweepstakes can we run? These are all things that are not really able to be discussed or established over a phone call. And, you know, no two retailers are the same. No customer base is really the same. And so what works in Australia isn't something that can work in Singapore, which isn't something that can work in the UK. So it's all really different. So you got to go there.
So to find out more information, visit SiliconValleySuccesses.com. And also our LinkedIn, Facebook, and Instagram, where we update you on a regular basis of what's happening here in Silicon Valley. So once again, SiliconValleySuccesses.com. And back to Conor. Conor, so you're traveling around the world face to face. You're meeting these sales teams. You're seeing how they work in their stores. How's that being able to adapt to different business cultures? How important is that as a CEO?
Well, I'd say that you definitely need to know how to communicate across multiple cultures, you know, multiple languages, multiple language barriers. It's very important that you have a strong, established position in terms of what you represent, in terms of what your brand represents, in terms of what your company represents, and then you can, you know, in a flexible way, take that to whatever market you're trying to serve and communicate that effectively. I would say that, you know, if you put too much of an emphasis on, you know, adopting and you know, people everywhere, everybody's basically a nice person. I've been everywhere in the world, all over the place. Everybody's pretty nice. And so they all want to communicate what their company does, and they all want to listen to how you can potentially work together. So, you know, my advice for anybody that looks like they want to roll out globally, it would be embrace the niceness of people and just go out and communicate your company and your mission and your values, and you'll win.
And then looking back, you've been the CEO now for how long?
I mean, it feels like forever, but it's about 2 years.
So over this 2 years, what are some changes you would have made if you could go back in time? Some lessons that you could teach us?
I think the biggest one is don't be scared of hiring good people. Early on, you know, being aware of budgetary constraints, I may have made a few poor choices in terms of hiring, and as much as we may have saved some money in terms of salary initially, it was such a mistake. It was such a headache. Having unqualified people to deal with certain, hardcore operational issues that they just didn't have experience in cost us so much time and energy. So I would say hire good people. I would say focus on a data-driven numbers approach. As much as your gut might tell you to do one thing, or the office might want to do another thing, you have to have a basis in numbers and in fact for everything that you do.
Now, those numbers, in fact, is that also to show potential investors later on, potential customers, or is it just internal?
All of the above. I mean, if you're gonna say that your numbers are really good, you need a frame of reference. If you're gonna bring on investment and they're looking at deploying capital, how are you going to calculate their ROI? If you want to have an internal conversation about what the quotas need to be for next year, how do you look at the growth in the industry and how do you quantify that? So any conversation that you have is ultimately going to be driven by numbers. And without good information you're not really going to have strong goals going forward. Now,
has there been any misfortunes in the last 2 years that you could share?
Misfortunes. Well, there's been, I mean, every day there's some unfortunate situation that arises and is dealt with. We've had everything from entire containers of product being sent to the wrong place. We've had manufacturing delays that caused us to have to air freight 10 containers from China to the U.S. We've had expensive prototyping errors. We brought in someone to do a complete rebranding before we understood who we really were, and resulted in us kind of just staring across the table at each other, not knowing what to do. So I think that business as a whole, like I said, it's a marathon, and every day is a battle. Every day there's a problem. Every day there's a solution, and it's just a question of, do you have the grit to face these misfortunes and push through them?
And then your company, as background as being an investment banker, if you were to raise capital again in the future for your company, I'm guessing it's a little different than when you're raising it for someone else. What are the steps that a CEO should prepare to raise capital for their company?
I mean, I think the first one is to be realistic about where you are. A lot of CEOs think that they can go out and raise huge amounts of money based on a business plan and a napkin with an IP attorney who said that they might be able to file a patent. And the reality is that when you're a CEO and you're responsible for a team, it's really important that you're grounded in reality first. And so that being said, being CEO, you know what's under the hood, you know where all the bodies are buried. You can have a very accurate assessment of how realistic various funding scenarios are. And so if your mantra is IPO or death, you might just die. and the reality is that you have to think about it strategically. Is it a good time for equity? Is it a good time for debt? What kind of debt is the right way to go? Is a convertible note the right way to go? At what stage is your company, and how are you going to deploy this money? I think for Luxie, I think that the next funding or the next capital situation will probably just be a growth capital funding for the global growth that we're intending for the next couple of years, and that's very exciting. And that's the right kind of funding for a company of our size, where you've got real opportunity, you can point to it, and you can deliver against it.
So let's go back. You used a lot of terms there that I think if we go a little bit more into detail, it'll help our listeners. When is it a good time for equity? When is it a good time for debt funding? Is that more the economy itself or more the stage of the company?
I think it's more the stage of the company. So let's talk about what it is. So equity is buying stock. So when is it a good time to sell stock in your company? Well, before you have any revenue and you have no ability to service any debt, but you have some good ideas and you've got some traction, that's a time to sell equity. If you can agree on valuation with your investors. If you can't agree on valuation with your investors, maybe you'll do a convertible note, and that'll allow you to establish that valuation at whatever point in the future the note converts, and that's converting from debt to equity. But the intention from all parties typically is that it becomes an equity investment. And then debt, of course, is borrowing money, and that's typically done when you're a little further along. You've got the ability to pay back that debt, and that can happen in several different ways, from a bank loan to some kind of asset-based loan where you say, I've got this purchase order and I need cash. Can I give you the money from this purchase order and you give me the cash now? So there's a couple different funding options there. And I think that there's no right scenario. It's really just, okay, we need to raise this much money. This is the kind of equity that we should look after. This is the kind of debt that we should look for. This is the kind of asset-based lending that we should look for, and that's a good way to not overextend the company in any one direction.
And you said growth capital. Isn't any capital for growth capital? What's your definition of growth capital? What would investors expect certain metrics for that growth?
So growth capital is actually growing the business. And I that sounds like a no-brainer, but it's actually not. So if you're going to invest a bunch of capital in engineering, that's not growth capital. If you're going to invest a bunch of capital in securing your IP, that's not growth capital. Growth capital is buying inventory, investing in marketing, and securing sales. So we're at 20 million this year. Give me $5 million, and I'm going to ramp to 40 million next year. And so your ROI is overall company valuation. Your mandate back to the investors is delivering against a forecast that you establish. And at least in the consumer product side, most of the spend is already allocated on a per account basis for whatever marketing needs to be done to support that account.
So how is cosmetics different than a standard startup where it's all, programs in the cloud? Where's the capital for the capital spend for hardware? Tell me about that.
Well, so in a way, every company has material startup costs. And if you're looking at getting a bunch of engineers, a bunch of servers, all of the sort of, typical components of the Eichler and Palo Alto, that's the next unicorn that everybody's chasing, those are all sort of clear-cut assets. As a beauty company, and particularly, the cosmetic company in the consumer product space, we are pretty asset light, and most of our money goes to creating the product for us to sell. So we have really minimal CapEx costs at the onset, and I think that that's something that obviously has attracted a lot of investors over the last couple of years. You're seeing valuations for consumer product brands go through the roof. Coty bought Kylie Jenner's cosmetic company for $400 million for a 51% stake just 2 weeks ago. You saw Tatcha get bought last year. You've seen a lot of different transactions in the space, and the valuations are just smoking hot because everybody understands that it's a very efficient deployment of capital, and the brand value ultimately becomes the key asset that you're developing, which is almost sort of like goodwill on the balance sheet. So, I think that from an entrepreneurial standpoint, you're looking at a much more efficient deployment of initial capital, whereas, an engineering group that's looking at developing some real hardware and a bunch of coders, $500,000 may not get them off first base, but on a consumer product company, that could get you your first product made.
Do you see this trend continuing, or what do you think is going to happen 2020, 2021?
A disaster. I think we're already starting to see the market softening. So, and that's kind of all over the place. More and more money is sitting on the sidelines. We're seeing less strategic deployments of capital. I think that the overheated valuation methodologies that have been deployed across the entire investment space are going back to sort of the more conservative multiples of EBITDA that make these funds feel a little bit more secure in what they're doing. And so I don't think that that's necessarily detrimental. I think a correction in an overheated market is okay. But I think it definitely means that any consumer product company or actually any entrepreneur building a company needs to really be aware of their exit and figuring out what kind of exit they really have on the table. So that may not be just sort of the carte blanche, oh, we'll just get acquired by an equity fund for billions and billions of dollars. It might actually be a strategic acquirer or a much longer term plan before there is an exit. And I think that I think that we're going to see sort of a return to more conservative valuations and transactions.
And do you have a story from your time at Luxie that you're very proud of that you'd like to share?
I think my proudest moment was actually just recently where we were involved in an award show, which is pretty big in our industry. It was the American Influencer Awards, and the entire team came down to LA. We all had our jobs, interviewing people on the red carpet, working with some of the other brands, big celebrities, Kim Kardashian, Makeup by Mario, all of these critical people for our industry. And I really couldn't do much because I was presenting an award. But to see my team galvanize behind the task at hand and really come together made me feel so proud. And to see such teamwork and camaraderie, it was really just amazing. I felt like a father, managing these people.
And if anyone wants to find out more information about Luxie and yourself, what's some ways to go about it?
Go check out luxiebeauty.com.
That's it?
And you can find me on Instagram. I have 2 followers. That's Conor Luxie. That's it. But if for anybody that wants to get a better sense of the company, www.luxiebeauty.com.
Great. Conor, thank you for your time today on Silicon Valley Successes. And for everyone at home, please visit our website, siliconvalleysuccesses.com, where you can find out more information and see all of our past guest information and some of the guests in the future. For example, next week we have Calvin Cam. We got Calvin on our show.
That sounds like fun.
I'm going to edit that part. All right. Thank you, guys. Yeah. Calvin Cam.
Thank you from all of us at Silicon Valley Successes. We hope you found the information presented today useful in your path to success. For further information on accessing the resources in Silicon Valley, you may visit us on the web at siliconvalleysuccesses.com, on Facebook and YouTube. Thank you. And remember, we want to help you in your journey to become the next success.